Hey, this is Scott Cole of bestdaytradingstocks.com and besttipsfortrading.com, and just wanted to give a few comments about the market action today. S&P closed up 15 points, up over 1%. Dow Jones was up over 150, or actually 140, about 1.3%. The NASDAQ was up 22 points, up just under 0.9%. The Russell 2000 was up just under 10 points at about 1.4%. And the Dow transports were up 62 and change, up about 1.4%. So overall we had a nice rally and decent follow through from yesterday's very strong market and yesterday's I guess test, so to speak, of the recent lows. But we're at an important juncture here. We have a look at today's action. The S&P climbed just above its 13-day moving average, and several of the other averages are still below that figure. We're going to get a little bit of trouble tomorrow because Steve Jobs resigned as CEO of Apple today, so that occurred after the market closed. And the last I saw in after-hours trading, Apple stock was down a good chunk of change, I think down about 19. So that's going to suppress the NASDAQ Composite and the NASDAQ 100 tomorrow. It was interesting to me today to see that the tech stocks, the NASDAQ, underperformed. Let me just look at the NASDAQ 100. Yeah, and that was up even less than the composite. So, and it's sitting right in its initial resistance zone. And also there's a gap it's still trying to fill up over 2150 yet. So the one issue I didn't like today was the decline in volume compared to yesterday. You know, on a follow-through day, we want to see more participation. We would have liked to see higher volume today. So that might indicate that the market's ready to take a pause until Friday when Bernanke gives his speech out at the Jackson Hole Economic Summit. And we also have jobless claims due out tomorrow. Last week they were reported at 408,000 new weekly jobless claims. The market's not going to like a figure that continues to go up from there. They want to see that figure get down under 400,000. Now, as far as other technical indicators today, advances beat out declines on the New York Stock Exchange and the NASDAQ by about 2-to-1 margin, so that's pretty good. With a 1% move up higher, I'd like to see that a little bit better than that, but otherwise it was okay. And the trend index that I look at for the New York Stock Exchange is still above 1.0 on my 5 and my 13-day moving averages, and that suggests that the market is still not yet short-term overbought in here. It's coming back more to a neutral level, actually. Another up day, sizable up day, will probably result in it the 5-day average dropping below 1, which it really hasn't done for a while. So when we're in a downtrend, those figures tend to stay more elevated. When we're in an uptrend, they'll stay below 1 a little bit more. So if we're going to maintain a downtrend, then those numbers will start going back up again if the market pulls back. Right now we're at a critical juncture, I think. The pattern needs, for the S&P, needs to break out above 1210, I believe I mentioned yesterday, so I'll just confirm that. Yeah, it needs really to break out above 1210. 1208 and change is that high from last week on the 17th. And the market has to get up above that to really suggest to me that we have an intermediate term uptrend in place. Otherwise, the pattern could be ominous. If we trade sideways from here and then ultimately break out down below 1120 significantly, then that would suggest we have another leg down to go. So right now, after two decent up days, I'd stay a little bit more defensive over the next couple days, and just follow the tape, as I always say.